Avalanche is picking up again. The AVAX token is outperforming the rest of crypto in the last few weeks, and that's for fundamental reasons, as in the on-chain data supports that rally. There is more activity on the blockchain. Let's have a look at that data, the data most people aren't considering, and let's try to figure out how much higher AVAX could potentially go from here. Let's compare Avalanche to the competitors. So first, this is the AVAX market cap relative to the Ethereum market cap. And interestingly enough, this is trading in a range for the last few years. And this is the outperformance I just mentioned a few moments ago. This is more than 40%. And if this trading range persists, there could be an additional outperformance of almost 160% from here versus Ethereum. Here's Avalanche relative to the others market cap. So how is AVAX doing relative to all other altcoins that are not in the top 10? Again, we've got our recent rally. And here the potential upside is 90% roughly. Now, what does this imply? It means that Ethereum, relatively speaking, seems to be rather high right now. And you can see this in prior videos on this channel. The Ethereum dominance seems to now hit a resistance. I do believe that currently the story around the Ethereum treasury companies and around the Ethereum ETF is now somewhat dying down. But that can be seen in the prior Ethereum video or potentially in the next Ethereum video, right? I publish videos on ETH regularly over here as well. Let's continue with AVAX. This is AVAX relative to Bitcoin's market cap. Now, again, we've got a trading range, but here we see long-term underperformance. And we're going to talk about the reason for that underperformance in a minute. Yes, we are bouncing off the support. And yes, the current rally still has a lot of upside, 110% to be more exact. But the chart also shows that AVAX is an asset to be rather traded than just long-term held. It does matter at what point in time we are over-allocated versus rather under-allocated towards Avalanche. Let's continue with two more relative valuation charts before we get into the on-chain data. So this is Avalanche relative to Solana. One could see those two assets as direct competitors because both play in the meme coin space and both have relatively low transaction fees. And unfortunately, a lot of the recent hype had been around Solana because of the pump.fun ecosystem, right? The meme coin launchpad on Solana. And that's why we see this long-term underperformance, and that's why here the potential upside is much less, maybe only 30% or so. Here's the last relative valuation chart. This is Avalanche dominance. So how much of all of crypto is currently in AVAX? And again, there's still quite a bit of upside of more than 110%. Now, where does this outperformance of Avalanche relative to most other cryptocurrencies come from? It is increased usage of the blockchain. This is the total value locked on the AVAX chain over time. And we see DeFi summer, which had massive Avalanche usage. You might remember things like Time Wonderland. Then came DeFi winter, but now recently we are growing in AVAX again. There's more and more capital flowing into the ecosystem. And there's also more and more trading happening. This is the decentralized exchange trading volume measured in AVAX. So this is not just going up because the AVAX price is going up. This is going up because there's actually more usage. So this increase in usage also explains why the price is going up. But it doesn't necessarily explain the long-term underperformance versus, say, Bitcoin, for example. Why is AVAX long-term doing worse than BTC? I think the answer can be found in tokenomics, as in more and more AVAX tokens hit the market, and that of course long-term depresses the price. And the tokenomics were incredibly aggressive up to this day. So we went from 42 million AVAX tokens all the way to now more than 500 million AVAX tokens. So more than a 10x in supply. This definitely depressed the Avalanche price quite a bit. But relatively speaking, when we look at the future growth, we are nowhere near another 10x in supply expansion. Avalanche will still be more inflationary than Bitcoin, but it won't grow as quickly as it did in the past. And that, of course, can help the asset's price, especially if the usage continues to go up, when there's more and more trading and more capital on the chain. Avalanche still has to find its niche. Ethereum is all about decentralized finance. It's all about real-world assets. Solana is all about meme coin trading. But what is Avalanche really about? There used to be the idea that Avalanche is all about crypto gaming, but right now it seems like the black hole token is dominating a lot of the trends, which is a new decentralized exchange. We've also got a few meme coins, but really we don't really know what the next adoption driver for AVAX will be. But we're going to look at the underlying reason for the increased number of transactions, for the increased usage in a second here as well. So here's the number of failed and success transactions over time. This is going up. Here's the number of traders over time on decentralized exchanges on Avalanche, also recently going up, mainly because of black hole. Here we've got the number of active addresses over the last 30 days, close to an all-time high. And this is very likely going to hit an all-time high because when we look at the monthly new versus old traders, this has spiked massively. If so far you got some value out of this video, then of course feel free to subscribe. I publish videos on Avalanche regularly on this channel, and we've actually predicted the current rally in the prior video. Feel free to check out that video. Is Avalanche finally cheap? That was published just 20 days ago. Now we've got a few decentralized finance protocols that did grow in the last month. We've got Aave, we've got Benki. So that's the Aave chart, that's the Benki chart. But we've also got MEV Capital, which tends to grow quite consistently. So it's a vault management protocol. Just have a look at the TVL of those different vaults. The TVL of the largest vault is also growing recently. Short term though, the price discovery of AVAX is not done on the spot market. It's actually done on the levered bets on the price, on the perpetual futures market. Because have a look at the trading volume in the last 24 hours. On the spot market, we saw 202 million worth of trading volume. But compare this with the perpetual futures. Here we had more than 1 billion worth of trading volume on Binance. Most perp traders are betting on rising prices, so the longs have to pay the shorts. It does cost money to bet on rising prices despite the token inflation. Probably because enough people are betting on the current rally to continue. But there is some risk with all of this, and that's the open interest. So the amount of bets on the price. If there are a lot of bets via perpetual futures on an asset, the spot price tends to be elevated. When that short-term capital then withdraws from the asset, then the spot price tends to follow as well. And that's the potential risk. So the amount of open interest, the number of bets on the price on the perpetual futures is now at an all-time high for Avalanche at 1.8 billion. This is massive. And the Avalanche price, of course, also followed that to a degree. When there was less open interest, when that went down, then the AVAX price also went down. And that's the potential risk here. Usually, if you want to hold an asset over the long term, you just buy it on the spot market because there are no financing costs. But if you just want to get in and out of an asset very, very quickly, and you want to take advantage of low transaction fees, and you're okay to pay a financing fee for the short term, then you're using perpetual futures. So having a lot of open interest is an indication for a lot of short-term speculative money in the asset. And that's the big problem with AVAX right now. There's also a lot of trading volume in the asset. And of course, there's positive correlation between trading volume and the spot price as well, which is again not that great for the future price development of AVAX. We are not seeing necessarily a short squeeze here. The number of liquidations on the short side and on the long side are relatively balanced. So this is not just artificial inflation of the price to push out a lot of people that are betting on falling prices. In the end, net, most people still bet on rising prices. And fundamentally, we do see more usage of the blockchain. So it does make sense that the current price is appreciating. The only problem is that right now there's simply so much short-term leverage. So it does make sense to be cautious. It does make sense to have maybe a trailing stop loss. That in case we don't see this current rally continue, that then after a 5, maybe 10% drop, at least relatively speaking to other cryptocurrencies, we exit again, especially if this coincides with the open interest suddenly sharply going down. That's the main risk here. It's just the short-term speculative money that's now jumping onto Avalanche. Now here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of pump.fun traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like pump.fun tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost averaged into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very, very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient, but it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. It just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why ApeCoin did so poorly. The supply increased over time massively, and the early insiders and the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to ApeCoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since ApeCoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here, but long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those 2 videos in total amount to roughly 1 hour of content. After you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those 2 videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you will just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the 2 that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.